Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 11th of May. I'm Daniel Lam, your host for the podcast. Overnight, the US inflation figures show that price pressure continues to ease. Annual core CPI inflation slowed from 5.6% year-on-year to 5.5% year-on-year in the month of April. Meanwhile, the month-on-month figure was broadly unchanged at 40 bips. Shelter is the key component, and it decelerated from 60 bips month-on-month to 40 bips. And leading indicators of shelter inflation, such as the rents on new leases reported by Zillow and results of survey of apartment market conditions, show that shelter inflation is likely to continue to moderate. If you look at the other contributor, i.e. used cars and trucks, even though there was a 4.4% month-on-month spike, the Manheim Used Vehicle Index has rolled over, and that may foreshadow a fall in the used cars and trucks component. Lastly, the core services ex-shelter component, which Fed Chair Jay Powell has focused on as a metric of underlying price pressures, that eased sharply in April. Now, that is mainly driven by wage inflation, and we see that leading indicator of wage growth, such as the job openings and quits rates from the jobs survey, is foreshadowing a continued deceleration going forward. Overall, this is likely to reinforce the view that the Fed is likely to pause in the June FOMC and may implement rate cuts in the second half of this year. Indeed, US 10-year yield continues to show the classic downward trend pattern, making lower highs and lower lows, and appears to be kept at the critical resistance at 3.6%. Such an environment of falling inflation and slowing growth is likely to bode well for high-quality bonds, which we've been advocating as part of our SAFE strategy. Likewise, the dollar index DXY is showing a less prominent but similar technical pattern, and it has heavy resistance around 102.50. Rebounds in the US dollar appears to be weak, and investors should be looking to go long currencies such as the euro, which we discussed in this podcast on Tuesday, plus also gold, which may also benefit as a hedge against potential market volatility. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.